Michael Fox, and this is the Prospector Podcast. And I have joining me today, I have the President and CEO of StrikePoint Gold, Mike Allen. Welcome, Mike.
Thanks, Mike. It's nice to be back here.
Yeah, that's the trouble with these. All of a sudden, we get too many mics, and we confuse everybody. But let's, before we get into today's discussion, let's give everybody the quick 10,000-foot view of StrikePoint Gold, what you're doing and where you're doing it.
Okay, StrikePoint Gold is focused in Nevada. We have two projects in Nevada called, and it's the Walker Lane portion of Nevada, so the western part of the state, the belt of rocks between Reno and Las Vegas. We have two projects there, and we're about the fourth largest landholder as far as we can tell in the Walker Lane. Kinross is in front of us, Anglo Gold is in front of us, and then there's a private guy in front of us, but we're number four. We've got about 140, 150 square kilometers under control. We're largely focusing on our Hercules Gold project, which is on the Reno end of the Walker Lane, but we have some interesting news that we'll be talking about that's taking place in the area of our Cuprite Gold project, which is more of the middle of the Walker Lane, just south of a place called Goldfield.
Yeah, wonderful. That's a good way to describe everything that you're there. What we would like to talk about today is the Walker Lane as a whole district, because it is very unique. It's a very large district of what would normally be considered low grade ore, but there's so much of it in that area, and the economics of it are such that it's unique, and low grade doesn't mean the same in Walker Lane as it does in other areas.
Yeah, and I mean, like, Nevada is a wonderful place. The Walker Lane is a great portion of it, and there's a lot of things that come together that make low grade work. And I mean, I'll start with the people. I mean, Walker Lane, Nevada, it's obviously it's Nevada, and the efficiency of the workforce down there is second to none. That's one of the great things about, tier one jurisdictions. You've got an experienced workforce that knows how to make the equipment work, knows how to break rock, and so your cost to move a ton of rock is quite low, and you're using the biggest equipment that Cat or Komatsu can work or can make. The second thing, and this is what my end of the business is the geology of it. You're dealing with an environment that you get the gold is oxidized, and so that leads to interesting metallurgical processes and cheap metallurgical processes, and so this is the heap leaching stuff, and that's where we're moving large volumes of low cost to process material. The math starts to work out, and you get some really funny numbers that happen quickly. And then the third thing, which is sort of goes back to the people, is the infrastructure. You are in the lower 48, and so the ability to tie into grid power, or even just to get things, it's if you're wanting to get the biggest piece of equipment on God's green earth, it is literally a call down to the dealership that's in Las Vegas, and it's on the back of a truck, and away it goes. That's the easiness of it. You're not dealing with weirdo things like ice roads or Hercules transports or weirdo stuff. It's this stuff is available, and the logistics become quite simple for running operations or exploration programs. So it really is a combination of location, infrastructure, people, and geology that make these low-grade deposits really work.
Yeah, and there's a lot, and I mean a lot of activity in the Walker Lane. You're one of God knows how many companies that are working in that area of Nevada. They can't all be just chasing their tails. So let's talk about some of your neighbors and what they're doing, and the economics behind their projects, and then we're going to take that and relate it to what you're doing and draw some comparisons.
Well, it's an interesting part of the world, and the Walker Lane is going through its own renaissance. I'll call it. Back in the 70s, a statement was made that nothing big is found in the Walker Lane. Okay, fine, whatever, and you can't really argue with it because at the time the geologists were discovering the supergiants of the eastern part of the state. Now you're looking at a different world, and I've played my own part in the Renaissance. I sold a company called Northern Empire to Coeur Mining, where we just started to kick off the Renaissance in the Walker Lane. It was one of the first transactions, but subsequent to that transaction, a quote unquote super giant was discovered, and that's the what you call the Silicon Merlin discovery, and it's been rebranded as the Arthur Project, encompassing the entire Beatty district. Anglo Gold went out and drilled a blind target, and they've put about 16 million ounces of measured and indicated on the board, and then they've spent a fortune consolidating the district, and that that fortune is actually indicative of where they see things are going and what they see happening with the district. Yeah, I mean, recently they just spent, I think it was $197 million to acquire Augusta Gold. That transaction was announced, I think it was on the 16th of July. And you look at what Augusta has. There was two projects that were within Augusta, within the Walker Lane, close to Silicon Merlin. One was a 0.75 grams per ton deposit, relatively high strip ratio. That's called reward. And the other one was a point three, a point, pardon me, a 0.53 grams per ton gold deposit. That's called the bullfrog. And you sort of have to say, well, okay, those are interesting things, but they paid $197 million for those assets, and it's a consolidation around everything that they're doing in there. But it shows that they spent the money, and I would dare say that probably Anglo Gold has spent close to $1 billion consolidating the district, getting all these low grade deposits, and they see what the future is.
Yeah, the interesting thing about these low grade deposits, though, is that the numbers start to add up, and because they're spread out so far, before you know it, you're dealing in quite a few ounces in the ground, but
Yep.
it's all low grade.
Yeah, I mean, there's a deposit in Nevada. It's in the eastern part of the state that recently, actually, it's not a deposit. It's a mine. It's called Pan, and Pan is historically been a small, low grade open pit heap leach thing. It's about 0.38 grams per ton, and it recently sold. Equinox sold it to Mineral Alamos. It was $115 million of cash and shares, so not a small check, and that was supported by a bought deal financing. So the market is rewarding it. At $2,000 an ounce, the all-in sustaining cash cost for Pan were about 1650. It throws out 35,000 ounces a year. So call it 10, 12 million bucks goes back to the head office. And it's interesting. It's kind of nice. And $10 million a year is not anything to be sneezed at. But at 33, $3,500 an ounce, you're starting to see Pan throw out 60, 70, $80 million a year heading back towards the head office. And that's real money. And that is, the power of these things is you're seeing these low grade deposits because you've got such scale. They're putting out ounces, and the gold price has moved, and your costs have not, inflation hasn't caught up with the gold price move yet. So you're seeing a real disconnect in what is happening with these low grade producers just puking out money.
Yeah, so it's the general plan with a mine is that when the prices are low, that's when you mine the high grade. And when prices are high, you mine the low grade because you can mine it out profitably. So is that the catalyst for the run that's happening in Walker Lane right now, or is this something that's been ongoing for quite some time and we're now just catching up to it?
I think that you're starting to see a bit of a realization, sort of, to use your expression, a catch up when people look at these things and and this happens to to myself even. Like I looked at Penn and you go, well, what's the point? And then you get out your spreadsheet or your calculator to your back of the cocktail napkin and you put in the new gold price and holy shit, that's actually quite a bit of dough that thing is pushing out, and that's what you're seeing happen in the Walker Lane. Is there's a couple of things. It's one, it's just the brutal math of the situation. Today, gold is at $3,500 an ounce, all in sustaining cash costs for some of these things, 11, 12, $1,400 an ounce. That you're making a lot of money, so you're getting an excitement, and then the other part of the excitement is we're getting to see an area play starting to develop around Silicon Merlin. I mean, there's a obvious massive discovery that's being made, and all these low grade things or things, the geological oddities that people walked away from back in the 70s are now getting another look, and they're actually in modern light pretty good. And that actually brings us to our Hercules project. I mean, you look at Hercules and it's competitive. Um, you put, for the sake of the argument, we've been discussing Pan. Pan's a 0.38 grams per ton deposit. It's never been particularly big, even before it was a mine. I think that the reserves right now are somewhere around 250,000 ounces. The Hercules exploration target, which is an early stage resource, is between 0.48 and 0.63 grams per ton. So significantly higher, 25 to 50% higher grade. And the ounces that are projected to be in the exploration target are between 819 and 1.01 million ounces. So 3 to 4 times the size at double the grade, and you go, hold on a second, that thing is actually significant in this new environment, and it stacks up very well to other deposits that are being put into production in the Walker Lane. Centerra just made an announcement a couple of weeks ago that they made a go decision on what they call their Goldfield project, which is in the Walker Lane just north of our Cuprite project, and it's a 0.66 grams per ton deposit. And they're putting that into production. This is Centerra. This is a big company. So it says, you take a step back, and Hercules, bigger than Pan, bigger than actually Goldfield, comparable grades. These things are valuable, and these things will produce a lot of money when they get mined eventually. So it's an interesting time for our shareholders. We've got a $4 million market cap. We're starting to see some volume pick in, and I think that people are starting to see the opportunity of what we're doing down in Nevada.
And remind me again, what was Pan just sold for?
Pan was sold for 115 American. It was 90 cash and 25 in stock, if I remember the news release recently.
So that's a considerably greater value than the 4 million market cap that StrikePoint currently has.
Well, exactly right, and that's 115 American dollars versus 4 million Canadian dollars of for the StrikePoint. So it's even more disconnected.
So all this activity that's happening in the Walker Lane, Nevada is a top tier destination for mining operations. It's about the ease of operating in the area, the infrastructure, and everything that goes with it. What does all this activity mean for StrikePoint and its two projects?
Well, it means that there's a lot of people that are looking around, and as we advance things, things things become that it's transactable. There's a lot of suitors for projects in Nevada or in the Walker Lane. There isn't a mining company in the world that isn't comfortable working down there. I think that the one of the things that I find very interesting is the Centerra Go decision that is 15 miles away from our Cuprite project, straight line distance. Um, and so, Cuprite is no longer this geological oddity out in the middle of nowhere. It's going to be right in downtown mining USA. So it's going to be interesting to watch how Centerra develops it and then seeing what the lessons learned there and how they get applied to Cuprite. And then Hercules, you look at all the transactions that are happening in Nevada and the Walker Lane. There's upgrading of resources that we need to do. There's work that needs to be done, but the ultimate prize is attainable. Hercules is competitive with mines and projects that have been transacted upon in the states, or probably in the state of Nevada. And I think that those are good, things that for our shareholders or potential investors to remember is the size, the scale, and the grade is comparable to other projects that have gotten the bid or transacted on. And I think that it's going to be time that we push forward on Hercules, start bringing market attention, start bringing things to the forefront, and really start unlocking the value for shareholders of our two assets in the Walker Lane.
Yeah, we always talk about economies of scale and the relationship, the bigger things get cheaper and that. But when there's so much activity in an area like where you are, do you start to see economies of scale in data? As an example, you can look at what your neighbors and all these other companies are doing on their projects and be able to extrapolate that to the projects that you're working on.
To a certain extent, it's easier to look at the juniors because juniors will put out data because it's the news flow. The majors are a bit more tight with their data and the materiality of the data. A single drill hole coming out of Silicon Merlin is not material to Anglo Gold, so they don't talk about it all that much. They give you a resource update once a year, maybe an exploration update once a quarter. A junior, you actually get a lot of news flow. So if you have a neighbor that's doing something different, they talk about it. You see them at conferences, and these things are out in the public domain. But one of the things that you do see the economies of scale, and this actually I saw this when we were down at the Sterling. This is years ago when I was running Northern Empire. We were the end of the road, and we were a distant outpost in terms of where drillers were, where miners were, even if for in Nevada. So when you got your parts shipped from head office or the yard, everybody picked it over, and all the good stuff had been taken out on as the delivery truck made its way to you. Now, Beatty is there, Goldfield is there, Beatty with Anglo Gold establishing a mining operation, Centerra in Goldfield establishing a mining operation. You're now into a place where you're not the end of the road anymore. You're right in the thick of it. And so when you need things, you can get them. And that's, things being people, parts, fuel, all those other wonderful things. So that's where we're starting to see savings come in for our exploration programs, is that you're not the last of the line anymore.
Yeah, that helps lower costs and makes things work a lot better.
Yeah.
What are the plans for Strike Point as we head into the fall drilling season in Nevada?
What I really like to do is a two-prong approach. We've drilled off a lot of material in the northern part of the project where we get that exploration target between 0.48 and 0.63 grams per ton, 819 to a million ounces. That's an area that's still open for further expansion. We drilled off a big hole. It was 117 meters of 0.47, suggesting that those deposits are open to the south. I'd like to get a few more holes into the those big intercepts. What we've been doing in the background is we've been permitting in the southern part of the project, and that's an area that I have never been involved with drilling on. There is some really interesting historical data down there. The siren's showing somebody back in the day drilled 29 meters, about I think it's about 0.68 grams per ton, ending in mineralization. They just cut the hole off, and like, well, that's a good intercept, and so we've got to get down there and follow up on it. There's another target that we quite like. It's the Pony Meadows fault structure, whatever you want to call it. You can pan visible gold at surface out of the structure. Never been drilled properly in our estimation, so we're working on getting a permit for that. Give that a roll, and then we've got the Como Comets. We've got another permit that we've got there, and that's a past producer held by Newmont, and the trend extends onto our ground. And so we're going to look forward to getting a permit and getting out there and drilling off on that extension and exploring off for extensions of that past producer. So it looks like for me it's a hybrid approach of getting into the south, seeing what is new, and potentially finding some new discoveries on the Hercules Gold project, but also advancing the main known resource area, exploration target area.
Wonderful. So lots of work to be done as we head into the fall.
Yep.
There's going to be results and all sorts of excitement as this whole region starts to continue to mature. Mike, if people want to follow the StrikePoint story, how would they do so?
Website is strikepointgold.com. You can sign up for our newsletters. We are putting out quite a bit of material on just to educate people on what we've just been talking about, various transactions, how Hercules and our projects compare, and that's available through our social media, or you can sign up for our MailChimp mail blasts and really get yourself educated on the Walker Lane and the opportunity that StrikePoint Gold represents.
Definitely, people don't want to overlook either the district or this company. So I look forward to seeing more results, and we're going to be doing more chats like this as we go on through the future. Thanks for your time today, Mike.
Thanks, Mike. Appreciate your time.
StrikePoint Gold is a paid sponsor of the Prospector News. The host owns shares and warrants in StrikePoint Gold, bought at the market for investment purposes. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.